Good morning, traders. Welcome to another Flow Show. We write September the 2nd, Tuesday. Ryan won't be in with us today, and tomorrow is taking care of some personal stuff. So I'll be your host again. This is Cayman, and welcome. Before we dive into everything that's going on, and there's a few things going on this morning indeed. A reminder that you can still take advantage of that 40% discount on your monthly subscriptions. So with everything that's going on, we have more and more members coming into our community, which is great to see because everybody is helping out everybody every single day in there. We've also still got the possibility for you to put your name, email address on this mailing list. You will get all updates on how we evolve into trading analytics, and you only need to do it once. I don't know what the goodies are for September yet. I guess Blake may confirm that on Face or so later today when the US comes back to the markets. Hang on a second. But again, you only need to do it once. Once you're on that emailing list, you will get our updates every time that we are sending one out. That's it for the commercials. Let's move on to what has happened. And there has a bit happened, as we can see, all in markets today. First of all, let's have a quick run back to what happened yesterday, the comments that we saw yesterday, which already had some of them an impact on markets, but most of those impacts have been nearly completely undone, apart maybe from the best ones. So Starmer, Reeves, they are putting new people in place, and as we have seen this morning from the sterling market, the market does not like it. The long end yields are racing higher, and I'll come back to it obviously, but sterling got absolutely hammered as the bond market opened this morning in the UK. Schnabel was out as well, ECB Schnabel, and that's kind of funny because she is back on her hawks side, where later this morning ECB Simkes said pretty much the opposite. So Schnabel saying that monetary policy may now be mildly accommodative, and that the global rate hikes may start earlier than expected. The downside, the anchoring of inflation is unlikely. She also had the inflation risk is now tilted to the upside due to the tariffs. Also needed to add, like most of the central banks are doing, that the Fed loss of independence could boost the borrowing costs. So that's another one where she adds a bit of pressure to the downside in bonds, upside of yields. Maybe I should look at the European yields as well today. And as I said later on, this morning, ECB Simkes on the other side, he said that there are no reasons to adjust the rates for now, but he says many risks are tilting to the downside. He kind of expects the next cut to be in December, but the discussion may be back in October. And he also added that it's more true than not, another rate cut is coming. So that's completely the opposite of what Schnabel was saying. Back to last night, Besant had his daily, nearly, his Labor Day powwow ongoing. He said, first of all, on the Fed, that there is a good chance that Stephen Miran is seated by the September Fed meeting. And then he said bond and currency markets are calm. That aged well. He is also looking closely at Russia sanctions, and that comes after, obviously, that meeting that China, Russia, and India had over the weekend. He also says that regarding that, he plays down the China hosted non-Western summit as just performative. Then he went over to the tariffs, saying that he's confident the Supreme Court will append the tariffs. Okay, so we know that last week there was a court ruling that those tariffs would be illegal, and they needed to have another look at that. But so he's confident that the Supreme Court will append those tariffs. And then he said that he's not concerned about the dollar strength or the dollar weakness versus the euro right now. Um, and those two currency comments, just looking, and I'll obviously look at that as well. They came at a time where dollar yen was not trading very supportive, but then all of a sudden dollar yen started to rise. There's other factors as well because LDP is now the well, they lost the majority, but Ishiba is still the ruling prime minister, of course, but they are losing members every day, and there's already three over the past 12 hours. Um, Moriyama, he resigned because he found himself responsible for the LDP election loss. The election chief also resigned, and there's a third one of which I forgot the name, but that puts Ishiba obviously in a bit of a in a bit of a hang on, no sound. Can everybody hear me all right? It seems that I'm on. Yeah, okay. Um, so that puts Ishiba in a bit of a pickle again, and that is probably also one of the reasons why, despite risk coming down, and as I said, together with what Besson said last night, is one of the reasons also why the yen has been weakening versus the dollar mainly, of course, but also the crosses are still pretty much beat despite what's happening on risk there. Um, and then there was another bit of contradictory comments overnight in Japan, saying that the finance minister Kato, he's not seen plans for a new stimulus package, but less than an hour later, Ishiba was on the wire saying that he's ordering ministers to compile economic measures addressing the inflation and the Trump tariffs this week. So there's another package coming there, and we also know that when you uh, when you put all those packages in place, it tends to water down the public finances, etc., and that's usually not very supportive for a currency either. So that's another bit of a factor there. BOJ's Himino was also on the wires. He expects inflation to converge towards the 2%. They must continue to adjust the balance sheet and raise rates when appropriate, but he stopped short of saying when he would expect the next rate adjustment to come. So that didn't give us too much of a hint whether the Bank of Japan could go somewhere, I think, in October, if I'm not mistaken. They do have on the 19th of September, but um, most of the market participants don't expect them to do anything in September, just being on a wait and see mode. We've seen also those Tokyo inflation numbers coming down a little bit as well, so that may push them just on in the wait and see mode. Um, okay, then um, Australia, and it's just an article, but it just adds to the fun that we're seeing of late in global and this one more specific U.S. bond markets. The second biggest Australian fund is reducing the Treasury allocation in their books due to fears that U.S. policies may stoke more inflation, and they more specifically said that the mix of cutting Fed to support full employment and fiscal concerns are pushing them more out of U.S. Treasuries, reallocating their portfolio a little bit. It does seem like a global bond market thing right now because under maybe under the radar for some, but there are regularly those talks about the Dutch pension fund reform possibly coming now in January. It's been on the table for quite a while now, but possibly in January we will know more. So that's one for the diaries, and also there bond market participants think that it could derail the European, in that case, bond markets a little bit as well. So it's really the theme of this early September. The market comes in and says, like, hang on a little bit, we need to pay attention to what's going on in bond markets. And we saw, obviously, at the European Open this morning, that big wake-up call, sending shivers through the market. What else did I note? Another one for the diaries, okay? And then we talking more specifically about the dollar. It's not a yearly event. It is for sure not in the current context of those tariffs coming in, going out. This still some uncertainty surrounding them. As we know, deals have not been put to paper yet effectively, although frameworks have been decided. But on the 15th of September, it is tax-paying day for the U.S. corporates. So put it in your diaries. It's less than 2 weeks away. It's just before the next FOMC. I know that we will have a lot of data in between, so don't trade this right now. But it could be, and again, it's not a yearly event, but it's one to put in the diaries. It could be that the U.S. corporates will have, for their tax-paying reasons, some dollars to shift around, potentially buy. So, I mean, it's one that really we should just make a note of it right now. Can't trade it because we still have those data even today to come, but make a note of it, okay? And I think I am roughly through the lines of the day. Yeah, we had those comments obviously about von der Leyen's plain GPS being distorted. Rutte was out just a few minutes ago saying that they are taking that jamming, signal jamming, taken very seriously. There is more talks going around about sanctions on Russia. So they may still be coming, especially I would say as well after that meeting between China and India and Russia over the weekend. By the way, Trump said that China is planning to reduce tariffs on the U.S. To zero, but in his comments he was kind of saying that it's all too little, too late for now at least. And that's it about the headlines. Let's see what has happened yesterday afternoon. Pop, pop, pop. Where did we leave it? We did not have too much going on after the close. Lagarde, not much new. Talked about Schnabel. On the By the way, on the auction front, because I see the French auctions here. On the US auction front this week, it's going to be only on the bills side of thing. Okay, we know that the Treasury is issuing more bills than bonds and notes these days. It's all going to be on the bill side. Usually, I tend to not completely discard this short end, so the bills side of thing, because there's a lot of hedging going in around in those things. But looking at what's happening in the bond market, there may be some sort of attention that the market is paying to all of the bond issuances these days. Okay, so don't completely dismiss it. I think we may be starting today, yes, with the 3, 6, and the 1 year bill auction. So if you're around, just keep an eye on them, because it could send just a bit of an algo blip through the market as well. Okay, if you are around at the time of production. We've had Kiwi terms of trade, export import going down. That's usually not a great picture. Although the terms of trade quarter on quarter, it's still Q2 as well. We're better. The slowing down in volume is usually not really a great thing to have as well. Okay, moving over to the yen. Yeah, the 10-year JGB auction. I actually didn't really see the results, but I don't think it's been it may have been a pretty decent one because we saw the 10-year JGB trading a little lower after that one. Um, French government budget balance, pretty bad, pretty bad. We know that France is in a pickle, okay? And again this morning, and that's been important as well for the follow of the euro. We've seen that it all started with the sterling this morning, but the euro followed suit. It has been um, mainly on the French side, and then actually also the Spanish side. Bond side came down a bit, so the yield's pushing higher. Usually, when we have a bit of stretching of the spreads between France, Spain, etc., versus the German rates, it does cause a bit of stress, and it's usually not brilliant for all things euro either. So that's one of the reasons also, besides the spillover effect from the UK gilt market, why the euro is on a weaker footing this morning too. We then had the European CPI data out for August, actually just just ticking up 0.1 point 0.1. It's as expected. That's still not far away from their 2% neutral range or target range. Core 2.3, just around the last month's number, but it's got completely ignored by the markets today. Okay, so then we had the 2-year Schatz auction. Also there, the market is making the governments pay. We had the auction came in 6 bps higher than the prior one. What's next on the docket? We are going into manufacturing PMIs from Canada. Usually not a huge mover, but again, in those markets that we are seeing today, with that big wake up call that we had this morning, we can't rule out anything at all. Okay, and then we will have the ISM data out. We already mentioned that yesterday. Look at what's coming out here on the manufacturing side, and especially as we are in employment week. Um, have a close look at the component here around employment. We do know that services are the bigger piece of the puzzle, but don't don't go rule this one completely out. Don't dismiss it completely. What I was going to say, because of how the market is trading right now, quite nervous. Okay, um, and that is about it. We have the economic optimism, but hasn't usually been a mover. And then we will have Nagel speaking later today. Let's see if he takes Schnabel's line, rather being hawkish again. Trump speaks. I don't know why it's put on the calendar, because he speaks virtually every day. But again, we may hear something about that China, Russia thing, India thing, and perhaps even the Ukraine situation. Not sure exactly what the subject is of the discussion. I may want to have a quick look at it. What is in on the docket today? I don't see specifically a theme. Before our next flow show, we will have services PMIs coming out in Euroland tomorrow. Okay, so those could be extra movers. We also will have Bank of England's breeding on the wires. Also there, the services PMI coming out for the UK tomorrow. So that is going to be the spice for tomorrow morning. And without further delay, let's take a look at what has happened today. And obviously, we start with um, the UK. And to know exactly what has gone on with the sterling, it suffices to see what's happened on the sterling long end, and even the shorter end has been moving as well now. This is a vote of no confidence in those appointments, and a vote of no confidence to the fiscal situation in the UK today. Um, from the get-go, as the UK markets opened, we saw another addition. It was already happening last week, was already happening yesterday as well, but we saw an addition to those yields, and the gilts really getting host, and the market all of a sudden woke up on the sterling and sent the cable, um, well, about 100 and 140 or 150 points lower. Like, it lost basically a percent this morning, cable, in a very, very quick fashion. That was really at the opening bell of the UK market, and the bond market actually did not like anything this morning. So the UK got hit quite severely. Can it continue? Obviously. I mean, the market is now in their tres quarting um, moment again. Okay. But it's not as severe as what has happened there. It's not that the market is not as worried that it is, but um, it's had the warning signals already. Yes, they don't like what they are seeing. We said that there was a risk going further into the year, that getting closer to the budget, getting those reshuffles. It's a Labour government after all. They are talking about taxes, taxing the wealth, taxing the banks, taxing whoever you want. If you make money, it's not looking bright right now, and that is the reaction that we got. So now we will have to see whether we are going to see some scrambling back of Starmer or Reeves, perhaps trying to mend a few things. But if that doesn't happen, unless the bond market, it's stabilizing right now, but it stabilizes at low levels, okay? But unless the bond market starts to recover, um, it's hard to see really sterling recover a lot, okay? It is stabilizing, yes, and we haven't broken through that big 133.65 in the process, but we don't know what's going to happen this afternoon in the States. Okay, we have data coming out. We have the States coming back online after their Labor Day holidays yesterday, so there is a potential that we are going at least for a thorough test of this 133.65.75. Okay, if it breaks, there's probably going to be a bit of follow through down to 132.90, 133.15, and then we will have to see, okay, what's happening. Will the market completely go gangbusters on the dollar side of things? Remains to be seen, because we do, as we know, have that risk. That risk that we have from the unemployment side for the rest of the week, and or as we already spoken about it yesterday, September was supposedly going to show us a bit of a weaker employment picture in the US. So will the US really buy a lot of dollars? Remains to be seen. But the cable is one of those, definitely on the back of what has happened this morning, that is one of the most vulnerable if we see a follow through on the dollar purchases today. Recovery 134.20, 134 and a half. I expect that if ever the dollar gives back something, I'd expect on the day that somewhere in the mid 134s we are going to see some supply here in the cable. But I would say the mover of the day, even though, as I said, the French bonds were also not looking good. But one of the movers of the day has been euro sterling. Obviously, it is the biggest sterling cross pair, as we know. That obviously saw a big ramp higher from the opening as well. Was relatively quiet overnight yesterday. Actually, euro sterling was trading slightly down on the day. But with everything happening on the sterling, that ramped through that 86 70 75 resistance now, and we went up to a trend line here, right around 87 the figure, and that capped the debates for now. It's trading around 86 85, which is around here right now. I I would say on the day, we're probably going to find buyers around 86.70 now if we get a return over there. It's only if we get news that will support the UK bond market, that we can trade back there and force people out of purchases that they did this morning. But for now, I'm not going to counter this one. If there are no changes, if the we know the market is not looking with a good eye to everything that Starmer and especially Reeves are doing right now. It could go for a walk and get back up to those 86, 87, sorry, 40, 50 zone before it's open. Maybe a little bit of an intermediate resistance around 87.15, but it is possible that we push through, okay, for the time being. And until we do, though, respect that little 87 right now. Um, I am about to look at the euro dollar right now, Mike. So the euro dollar as well got a knock on the head. First of all, it's the dollar has been moving higher versus everything, okay? And then we had the 8 a.m. London acceleration where also the euro came down. We also saw, as I said, sorry, the French bonds getting hit. So traditionally, if you look at the spread, and we can see the spread here, which has been very quiet. That's between the French 10-year and the German 10-year, has been very quiet. It has been ticking up, okay, and that's also weighing on the euro. But the main thing is the stronger dollar across the board, and a move in sympathy really with what happened in sterling. The dollar has regained some strength because it's bad elsewhere. So it did have its role as a um, safe haven is a big word, but again, also yesterday we went towards the top end of the range and we couldn't get there. But I think it's just forcing people out of positions. People who were trying yesterday, perhaps to go for a break of the range. Me myself, I was actually long until this morning, but then when I saw at 8 a.m. What was happening in the cable, I just fortunately went out of my euro dollar longs for a minimal profit. Um, yeah, I mean, it has a lot to do with the dollar, with what's going on in the bond markets today, Mike. Okay, um, but but we are still in the range. Okay, whatever been said so far, whatever been done in the markets, yes, the dollar is coming back. Yes, the dollar is beat, but we are still in the range. Okay, and for as long as that range hold, we could argue whether it's 115 three quarters, 115 and a half, 115.60. We are still in it, okay, and we have seen this. We have seen this on the way up. We have seen it on the way down, okay, and we have seen it here. We have seen it on the way up, and we are seeing it again today, okay. It is still in the range, but for on the day itself, for as long as we are below 116.60, there may be an extension to what we are seeing today. We will see how the US market wakes up. I don't know, but the more likely scenario, I would say, is that we go for a little bit of a test here. Maximum here if we get better US data this afternoon, because again, I would not think right now that the dollar market is ready to really go buy dollars in a solid fashion ahead of what's to come on the job market front. Okay, so that's what I'm thinking right now on the euro dollar right now. Sterling yen, Ali, yes, you could, but then I'm going to show you the dollar yen, but we also obviously need to look at yen crosses, because they have been rain or shine in the risk market of late. They have seen buyers on dips. If you look at sterling yen in particular, yes, we saw a big setback on the sterling yen because of what's happened in the sterling this morning. But if you look at what is happening here, like more, this is going back to June, okay? We have seen those setbacks. Yeah, we can. This can go back to 195, but look at the dollar yen. It is still quite supported as well, and the dollar is the yen is finding is not finding many friends, right? You have this LDP situation right now. We don't know about the Bank of Japan yet. Ishiba is trying to hold on to his seat, but will he be forced to 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 leave? So much uncertainty in the yen right now that I'm really taking the safe side and not do too much in the end. But if you want to get confirmation for euro yen continuing to drop, it has to go below 198, 197 and a half. Then you're going to probably see more follow through. But this one is really bothering me. Yes, it's a dollar move, but then you look at the combination of what I said earlier, like Besant, the LDP losing members. Um, what's going to happen to Ishiba? The problem is also, and that's what I'm spoken about before the elections and into the elections. If Ishiba is going, or even now, if he wants support, he needs third party support. And all of the opposition parties are not this. I think there's only one that is hawkish, that is saying that Bank of Japan should hike rates and they should go on more fiscal austerity. But all the others are rather on the weaker side of the fiscal um, spectrum, and I fail to see where it's really going to support the yen for a longer time. I mean, we are still in the range here as well on the dollar yen. We're trading 146 and a half, 149, right? But it's every time it's coming back. Every time we find those lows here, it's coming back, and that is also due to support in the yen crosses. If you look at the euro yen, we've had this setback in the euro dollar this morning, but we're still trading comfortably above all the supports that we see here, above 171. Okay, we're rather trading around 173. All right. So if you look at the medium term, I struggle to find uh, um, a lasting reason. A lasting reason. You can trade the intradays, no problem. If the yen is coming back at some stage, the intradays are tradable. But I struggle to find a lasting reason to be long yen. Okay, and this is right now. Something has to change. That means probably Fed cutting, ECB finding it very hard to justify holding because the EU economy is not coming off the ground. So they may find it that there need to be some more support because inflation may be sticky or even a bit sluggish. Yes, there may be something coming, and then the Bank of Japan hiking. There may be something coming, but for the time being, I don't see too much of a reason to be lastingly long yen personally. Right, let's have a look at what's happening in commodities land. Um, yeah, well, this one I'm a little bit out on the money, but not much. I thought we would be in for a bit of a break here. It is not happening, but there's one thing here. Really Aussie, especially I would say the Aussie, because we see the Aussie Kiwi still being bid. So the Kiwi is not looking as strong is a wrong word, but as stable. This move really seems to be completely in sympathy with what happened in the euro and in the sterling and in the yen. Yes, maybe somewhere also driven by what's happened in the yuan overnight because we had the first just a tiny bit higher fixing in of the PBOC. Yes, the dollar is bid elsewhere. Okay, so this is coming back down, but I'm still thinking that we may just, depending on what happens with the dollar, we may just hold this 65. So yeah, I bought it a little bit too high, but then I added also in the low 65s, been trading that around. So my average is not really horrible. I'm around here somewhere 65.30 or so. And if it goes below 64.95, I'll just let it go and put it in the bin. But it does seem to me like holding just that tiny bit better than all other things like call it cable or euro for instance. Yeah, but it's all reduced positions still, Ali. I'm not doing anything. I'm not doing anything sizable. We are still start of September, and in September there's a lot of things that are going to happen. So I personally don't think it is useful to go all gangbusters in full load positions right now. Okay, right. Gold. We had that move through the prior high 35 in during the Asian session. Worth noting, second Asian session that gold has been bought over there. But then we had a round of take profits, which was very possible. And then we had the let me put it maybe on a little bit shorter time frame first. Then we had this setback that we saw together with all the dollar pairs really. Gold is trading lower again. Do we have a first support here at 46.60? Maybe. But in general terms, if you look at what's happening in the bond market, yes, higher yields are in theory, in theory, not very good for gold. But look what's happening from the other side of the spectrum. If people lose confidence in bond markets across the globe, okay, knowing what's happening in with that meeting, China, Russia, India, causing more stress. Knowing what's potentially ahead of us for the Fed, unemployment, whatever. Um, I think there's still a good enough cocktail for gold to hold on setbacks. Can we see setbacks? Obviously, we can see setbacks because we don't know what's going to happen with the dollar. The dollar could do well, and we can see a move lower here. But I doubt that in current context we are going to stray too far below 34, 50, 55. Okay, I guess that if we get down there at any stage later today, potentially in the US, we may start to find buyers again. Where I'm just as you know, I was long from around here, right? And then I added a bit, and then I let most of it go on the way up, so only tiny left over. Little bit more on the day because I think that at the end of the road, whatever happens in the global situation, the global context, it is still going to be supportive for gold. But also, if you look at how it trades technically, there is absolutely nothing that is telling us that we need to start to panic. We have seen those bigger setbacks. Yes, that's why people use stop losses. Okay, so mine is probably going to be somewhere below 34.20 on the rest that I have from below here, but I would suspect that with everything that's happening now, we are going to see buyers on dips and potentially having a look at that 35.45, even perhaps 3600 in the near future. I'm not going to say it's happening today by no means, but in the near future, it is possible that we are going to see that. What needs to happen? Lower employment numbers in the US. That is potentially for me, barring stress in the geopolitics, etc., which are continuing, and Asia also starting to buy again. But lower employment data in the US are going to probably be a catalyst to take it higher, and that then could potentially bring us up to that 3600. I'm You know me. I'm a step by step guy. Okay, people are talking about 4,000. Maybe. All right, maybe we are going to 4,000. I have a very big one here around 3,900 in the very long term, but just one step at a time. Yeah, we are traders. If you're in a long-term position and you're long-term long, no harm done. This thing is really very, very big. I think even I would argue it's been and for as long as we stay above 3300, but then we need to drill it down to a little bit shorter scenario. Okay. Aussie cat. Did I have it on one of those pictures? Did I have the Aussie cat? Where did I have the Aussie cat? Aussie cat. Okay, we stopped around the top end of the range there. But this is okay, if you look for the technical move, we did stop around there and now we're coming back. It's all due to the Canada. This is not really an Aussie move, but it's rather a Canadian dollar move, right? Um we have seen this move in the Canadian dollar that we saw from 139s down to low 137s. This is really it, because if you look at the Aussie, yes, the Aussie is a little weaker, okay, which is causing this cross to come down. Um, but if you look at it again, we are in the range, right? We're in the range. If you look at it really short term, where is that low here? If you look at it short term, we we're actually right. I'm not going to call anything here. Really, 89.35, then 80, low 89s. Low 89s. If that goes, you may see it lower, and then on the other side it's going to be 90 and a quarter, 90.30. Kiwi Cat, I'm really not looking at it. Nuno, could you ask this? Nuno, you are in our chat room, aren't you? Please confirm if you are. I think you are you? Um, just yeah, Nuno, could I kindly ask you to ask this question in our chat room, and people will have a look at it. And because I'm also looking at the clock, and I'm going to close pretty soon. But ask the question in our chat room, because I'm not. I haven't looked at Kiwi Cat for ages, you know. I don't think it's. Yeah. I think maybe other people are going to look at it. And I don't know. Gav, I volunteer you to have a look at Kiwi Cat. Um, Swiss, okay, we have seen again a bounce from that below 80, okay, and now we are back around 80. Oh, we are back around 80.60, no, 80.50, but we have touched 80.60, which is the obliged level that we always have to get to for the Swiss to move. In the meantime, we're still in a bit of a downtrending wedge, you know, unless this breaks above 80.70. Then we can have a look back at 81, see what's going on there. It still looks like we may be building on a little bit of a downsloping wedge there. The good thing, if you want to be short Swiss, the good thing is that after the month end, okay, after the month end, we're bouncing just that little bit in the Euro Swiss. We are still in that stupid range, of course, but we're bouncing a little bit in that. In the Euro Swiss. So if you break above 80.70 on the dollar Swiss, we may do a bit of an extension. But if we test it and start to cap this one again, then we are going to reinforce this wedge here. Okay, Addy. Right. And that, ladies and gentlemen, brings me to the end of this show. So don't forget, there is. Let me just show you one more before I go, because this is what I'm paying quite close attention to these days, to see whether we can, in the dollar Norway, whether we can get back up to that 10.05-ish. Okay. And for the time being, I must say that moves back above 10 are seemingly find a bit of resistance. I think that may be attributed to also the euro NOK doing better, and also, as we have seen, or maybe you haven't noticed, but oils are trying to pick up, and this is the WTI, which is now back above 65, 65 and a half as we speak, and also the Brent is showing signs of resilience right now, and that may help the Norwegian kroner in turn. Okay, I'm actually secretly hoping that we get a move back to that 10.05 in the dollar Norway to try and counter this. If I see a move back up there, I'm going to get quite tempted. And that is it for me for today. Thank you very much for joining me. And tomorrow we will see what the US has done with its dollar to start their week. Have a good day, guys. Thank you very much.